Welcome to our live streams. This is where the grown-ups trade. No hype, no flexing, no TikTok guru nonsense. Just focus, discipline, and respect for the craft. Here we trade gold, the oldest store of value on Earth, at the precision scalping level. That's where trading gets real. Where a single tick too early or too late decides everything. It's the hardest style of trading there is. And the highest form, too. Because it demands mastery of mind, structure, and emotion. Execution over ego. Reaction over prediction. Can it be the most lucrative? Yes, but only for those who earn it. There are no shortcuts here. You can't fake discipline at 10-second speed. Most gurus out there sell you dreams from their demo accounts. We build traders who can survive the market on their own terms. We don't promise easy wins. We teach you how to build a system that doesn't break when you do. If you're here, you already know what that takes. Courage, grit, gumption, the willingness to get punched in the face by uncertainty and still show up tomorrow with your rules intact. Because precision scalping isn't just a trading style, it's a mirror. It shows you who you are under pressure, and it forces you to get better, not just as a trader, but as a person. The focus you build here, the emotional control, the ability to act without hesitation, those are life skills. They translate everywhere. So welcome to the Barcelona Trader, where we practice the hardest craft in markets and one of the most rewarding in life. Let's get to work.
All right, here we are. Welcome. It is April 4th. I'm sorry, April 4th, May 4th. May the 4th be with you. Okay, we're here to trade gold and gold futures. It is the Asia session. Some beautiful Mannheim steamroller here playing for us. Toccata. From 1979's Fresh Air 3. Alright, well, you're getting the view from behind me now. Camera right up here. Hello. I'm in my office, got my trade station, got everything set up, ready to go. All of our pivots are drawn. Let's take a look here. Let's take this to the 15-minute chart so we can kind of see what happened over the course of the day. And let's bring the vibe down and get ourselves into the zone. Okay. All right, well, here we are. As our show finds our audience, you'll come to discover that we're pretty chill here. So we're the grown-ups trade. If you stick around, you'll get a feel for how we do it, how we set up our charts. What we're looking at here is a 15-minute spot gold chart. We're using Hakanashi candles, and bullish candles are yellow or gold. Bear candles are blue or tears of sorrow. We see that we came down all day from when the market opened right here. This turquoise vertical line here is the Sunday open, 6 p.m. New York time, Sunday. We went up, you know, for a few minutes at the beginning of the session, right after the open. And then from there, pretty much just, you know, a few exceptions, a few spikes up here and there just to keep people on their toes. But basically, this was This was a meltdown, and even though it was a bank holiday in most of Europe and the UK, we thought what would be a pretty subdued day ended up just kind of being a bloodbath. It turns out that the U.S. Treasury yields right here hit 4.4 and above for the first time in forever, and that sent non-yielding assets tumbling. Dollar is now at 98.464, and the 10-year U.S. government yield is at 4.432. The gold volatility index is a little bit elevated at 27, and we have the VIX, which has been a little bit erratic, but is kind of stable now at 20.52. Okay, so anyway, none of that is really important. You don't really need to understand any of that to trade gold, but if you stick with us, you'll start to understand it and get the nuances and why it's important, but you don't have to know that stuff to get going. All right, so what we see right here, though, I'm going to take the indicators off, so we're just left with the lines that I've drawn on the chart. Okay, this thick blue line that horizontally goes across here marks last week's low of the week. So we can kind of tell where we are versus last week. It also happens to coincide with today's DM2. Price is hovering just above the DM2 right now and just below the previous day point of control. So we're kind of right in this little area here. In fact, let's see what that looks like actually on the 1 minute chart. Here we are. From open at 6 p.m. all the way to here. So let's put price in a box. All right. All right, here's our box. There's the top of our range. There's the bottom of our range. 15 to 24, that's a 9 pip range. That's too wide. So we're going to say that we haven't been. All right, so let's go with here. That's the top of the range, and that is from 21 to 15. That's 6 pips. That is good. Okay, that's our range that denotes where we started. We're going to give that. I think today is Monday, but it is the Asia opening range. That's the name of our little thing there. And we are about 7 minutes away from the official start of our session. So let's just kind of see how things play out. All right, I'm just finishing setting up a couple of the charts. Let's get the Zoom room open. All right. All right, we are now settling in. Let's just kind of sit on our hands here for a little bit and get a feel for what the market is doing. This is the same thing. We're just looking at it on a 5-minute chart. And here we are looking at the yields. We've got more on these charts than we need. Just taking advantage of the moment to tidy up my charts a little bit. All right. Yields are falling a little bit. The dollar is steady to rising a touch. Okay, let's go back to our execution screen here. Okay, so we did come down for most of the day. So we're in a little bit of a consolidation phase here, or what could even be kind of a technical bounce. Gold is steady in early Asian trade amid a likely technical recovery after front month COMEX gold futures fell 2.4% overnight. However, ongoing inflation concerns arising from elevated oil prices could continue to push monetary policy expectations toward more caution. Persistent incidents in the Strait of Hormuz, despite efforts to reopen the waterfront, could continue to push oil prices up and fuel inflation risks. Spot gold is little changed at 45.20 right now. We are at exactly 45.20. All right, but we are also just seconds away from the 8 p.m. candle. We are about 35 seconds away from the 8 p.m. candle. We'll see what direction the algorithms decide to push us at that time. Okay, there it is, right there. There's 8 o'clock. First push is up, right into some pretty tough resistance, it looks like here on the 1 minute. We look here at this 1 minute right here. See, we've got some pretty stiff resistance right there. A little bit, we can see it a little bit on the 5 minute and on the 15 minute. this is our job. This is what we do. We're here to trade this. Okay. Just see how we're doing here. Okay. That is pushing up. So I don't know. I don't know if I want to take a long with the yields above 4.4. That just seems like you're walking into a trap. Right up into the previous day point of control and through it. Now, what gave us all of that bullish momentum there? We're up at 45.25 now almost. Right, I think this is a get out there. 21. Could have taken more, but it did stall out on me, and you know, why take the risk? We're here to make a little money and especially not lose money, right? All right, reset now and just kind of, I'll explain why I took that trade. Just give me a moment here. Just want to make sure I don't have another trade coming up here. I don't want to talk over it, but I will explain why I took this trade. Okay, we still have some bullish momentum here. Right now we're pushing through previous day point of control. You see this orange line here, the previous day point of control. Okay, looks like we're going to do the same thing. Nope, not feeling as confident about it this time. I'm not going to take that one down. There's so much discretion involved, and intuition, and having a feel for the market, not just seeing the setup. pushing up into some pretty tough resistance right now, so I'm not too excited here about looking for another long. Like shorts are my thing for right now. We'll see as this plays out. But just given how bearish things have been, any bullishness that we're seeing right now is likely just a technical correction. You know, we came down, we consolidated a little bit toward the end of the New York session, toward the end of the day. Now that the market is open, as liquidity returns, especially coming up here, maybe at the 9 o'clock candle. But even now, starting to see some of that bullish bounce come in, and the question is, do we take advantage of that? Do we ride along with it, knowing that it's not a true move? When we're going up into a lot of resistance, it's just, yeah, we might miss out on it. But we're not going to lose money missing out on it, right? When you're going up into excuse me, I had to sneeze. When you're going up into the kind of resistance that you see right here, you know, if we look at this as this is a 5-minute Hakanashi chart right here, and you see that price is here in this channel right here. See, there's my cursor right there, this channel. And you know, you're trying to push up out of it, but you've already tried to do that 1, 2, 3. This is your 4th time trying to push up through it. And granted, you have, you know, more volume coming into the market now. You might get through it, but you know, the chances of it pushing up in just nice, you know, one nice movement without coming back on you and stopping you out is pretty low. You know what I'm saying, right? But I also don't want to take a sell because everything's bearish right now. It's like, it's too high to buy, too bullish to sell. Now we have kind of topped out here on this 1 minute. Right here. Right here. So we might, you know, it might try to push up into that a little bit, but it's probably going to topple over. It's going to start toppling over on all of these time frames that we're hitting this. If it can't push through these resistances, it's not going to have a choice. It's going to topple over. So that's kind of what I'm looking for. And I'm not even sure that I would want to take that trade. It's just like the best trade available to us, the best trade that's going to be setting up, but it's not necessarily a trade we would take if we could expect a lot better trades to be setting up. So sometimes you have to you have to triage. You know, you're like, okay, this toppling over right here and starting to come back down might be the best available trade to us if it plays out that way. But it still might not meet the threshold of a trade that's good enough to take, if that makes sense. It could just be another one of those sit on your hands and let it play out kind of evenings. Let's see here, if we look at it here on the 1 minute, see, we put price in a rectangle, we put price in a box when we sat down, just to keep track. That's about a 6 pip range, that box right there, so it's not that much. It's stretched out right now, but scrunch it down. This blue thick line down here at the bottom represents last week's low of the week, so we're pretty close to last week's low of the week. And right now we have this attempted breakout to the top, but we are hitting, so we do see on MT4 and some other indicators where we look at this, very big resistance zone that it's in right now. So it either needs to keep pushing up through that or it's going to topple over. If it topples, we might take it down. What you're looking at right now here in the center of the screen is gold futures on a 10-second chart. It's where I execute trades. It moves in tandem with the spot gold chart. Over here on the upper left, we're looking at the 1 minute spot gold, and on the bottom left, we're looking at the 1 minute dollar, the DXY. And I'm not taking these longs again because we're headed right into these resistance zones. And it looks like we might push through them. Great. Good for gold. But as long as those resistance zones are there showing me that probability is not in my favor, then I'm just gonna let it play out. As much as it can pain you sometimes because you get FOMO, you're like, well, this is money I could be making. You know, I kind of knew it was going to go up. But we use certain indicators because those indicators are right more often than they are wrong. So when they are wrong, for example, we are seeing this big resistance zone right here, this big red resistance zone right here, and price is trying to push up through that. You know, we see prices tried to do it before, almost got through it all the way back here over to the left, almost got through it, but didn't, got pushed back down, came back down, bounced off the bottom, came back up, tried to get through it, didn't make it. Oops, sorry, I don't mean to keep making that jump all over the screen. Now it's trying to do it again. Chances are it's not going to be able to. And look at that. It is significantly falling right now. It did topple over. And because I was talking about it, I missed that. All right, let's see what it's going to do now. This is one of the harder parts of trading too, because even though I think I know what it's going to do now, doesn't mean that's one of my setups. Right down to the point of control. See, we've stopped right here, this orange line, right where we predicted it would stop. Doesn't mean it's going to turn around, just means it's going to evaluate its life choices here and make a decision about what it's going to do. If it continues down, it's got another notch or two down to go. If it turns around, it means we've still got some bullishness left in this little technical bounce that we're in. Wouldn't surprise me if we get this kind of grinding up bullishness for most of the session tonight, with these few little, corrections that bounce down like that one just did, but then just grinds up for a little while. Okay. I think 28 or so there. This puts me at 51 for the session. Going right into a support zone here. Well, it's not a resistance, it's a support. There's always one good reason or another not to take a trade. If you look hard enough, you'll always find a reason why, I shouldn't have taken that trade. Okay, we're simply coming down to the bottom of the channel that we built there. There's a reason that that was the bottom of the channel. Oh, but it sliced right through it there, didn't it? All right. All right, so what we're doing here is we're just kind of waiting for things to play out here for a minute. When we sat down, I put price in a box, this rectangle here, this white rectangle. And when it got to be 8 o'clock, we had a failed breakout to the top. It hit this bear volume area up here, the swing high. Came back down pretty aggressively. And now we're at the bottom of the channel. We wicked through it for a second, but now we're coming back in, so it looks like we've had a failed breakout to the downside. And we are coming up fairly aggressively there. I think I'll try to get in on some of that. I think I've made better decisions. Thought that was coming up a little bit with a little bit more ambition than it is showing here. This doesn't get me out quickly. I think I'll just bail. Yeah, that's not good. Gonna come up for air a little bit, or are we done here? This is kind of my limit here where I need to be getting out. I just need to say, screw it, I got this one wrong. I'm getting out. It showed me a moment where I could have gotten out with about an $18 loss. There it is, $15 loss, $12 loss, $9 loss, $3 loss. Now I just want to get out with a little bit of a, why not just take a little win here? That's how greed and fear get you. Yeah. I'm just gonna get out. It's not that big of a deal. I took a little bit of a loss, but the objective here is protect the capital. Protect the capital. The loss was small. We are still up for the session, modestly. And it looks like it probably would have gotten us out for a couple dollars. But it's okay. It's okay to lose out on those when what you were really concerned about was taking a bath and the market was not moving in your favor. out. So it's still giving us this bounce here, which is what I was hoping it was giving us before. But then I had to bail. Okay, we're right up here to the VWAP point of control. It's exactly right here where we are. This blue dotted line right there that you can kind of barely make out. Not visible on the, whoops, on the 5 minute because I took all the indicators off. There we go. Okay, we're at the previous day point of control right now. You can see that here on the 1 minute. So in theory, this bounce should be reaching its end. It should begin to topple over. Although we see on this last 1 minute candle, it's a pretty robust bullish candle there. It's a little more momentum than I would have expected to see at this price. So maybe pushing through it. Switch back down here to the 10-second chart. Right here in the middle. And down here on the bottom left, it looks like the dollar is beginning to topple over a little bit, so that should give even more bullish momentum to gold. I'm looking for it to topple over, but you know, it's it's too high to buy, too bullish to sell. Oh, some of that bullish is starting to wane. Some of that bullishness is starting to wane. But we're at parity between the strength of the relative currency strength. We've got 3.2 for the dollar and 3.2 for gold. So that's another situation I don't like to buy or sell into, either one. So what we're looking at here is a market that is not wanting to give us anything, or at least not wanting to be predictable for us. Would have been nice to trade that all the way up. Of course, I'm not saying it wouldn't have been. Of course it would have been. But we couldn't, at least I wasn't able to predict it comfortably that that's what price was going to do right there. But yeah, that would have been an amazing trade. But again, I don't think we can go up much further. Much farther. We've been up here. You know, here we were. Just on the 1 minute chart, we were here at 8:14. Now it is 8:48 and we're back. Are we going to be able to push through it this time, or are we just going to pop back down like we did before? All right, what am I going to do now here? I'd like to take this down. This could just be a fake out though. But we are at a level where we've been before. You can see here on the 1 minute, we've been at this level before. It toppled over, it came all the way down, and it came all the way back up. Is it going to try to push through, or is it going to just topple? That's what we want to see here on the smaller time frame when we drop down. Keep looking at the 1 minute. Here it is on the 5 minute. All right, this is this rectangle here is our Monday opening range. I'm seeing a lot of bullishness here. A lot more than I thought. But again, this is just a technical bounce. I have to be wary of that. Not overstay your welcome in a long trade here tonight. You know, I feel like FOMOing into this, but again, I know why I'm not getting in. Took a sell here. It is a sell I am regretting. Thought it was going to play out differently. I had a chance to get out, but I didn't get out quickly enough. So the question now is it going to come back around and let me out? Or do I need to take another small loss here? Well, I don't like this. So I'm going to get out. But I'm just going to go the other way. All right. So we've taken 2 trades there. Well, actually, we took 3 trades. One of them went against me significantly. I was over. I reversed the trade. Got out with something like $18 on that one. But overall, it was a bad trade. Then I took 2 more trades. Anyway, I'm 81 in the hole right now for this session. Took another buy here. It was questionable. it's frustrating because even if I get a little bit out of it, it's not going to be very much. And like to wait around to not make very much is frustrating. Why am I even messing around with the other chart over there? I just need to get over here and get out, manage this. All right, I think that's it for me. I think that's all I'm going to do. So I'll see you at 7:55 in the morning. All right.